welcome to the TBL Trading channel, and in today's video we're going to be talking about the only price action pattern you're going to need as a forex trader, part 4. So this video marks the end of the series that we started a few days ago. So if you're joining us for the first time, we'd like you to hit that like button and subscribe, and if you're not, we'd also like you to hit that like button. We'd really appreciate it. So get a pen and a pad, sit back and relax. We'll get back to you soon. So in today's video, we're going to be looking at the last video concerning the only profitable price action pattern I'm going to need as a forex trader. And in this video, we're going to be looking at the head and shoulders pattern, trading the head and shoulders pattern as a reversal pattern. You know, in the last video, that is the part 3, we talked about trading the head and shoulders pattern as a continuation pattern. So in today's video, we're going to be looking at trading the head and shoulders pattern. That is, if we are in a downtrend, then boom, boom, boom. Trading the head and shoulders pattern as a continuation pattern. We're going to look at the extra confluence that you're going to need to trade this. How are you going to know that this head and shoulders pattern is going to actually change the trend? So if you watch the only profitable price action you're going to need as a forex trader, part 2, you found that I think you should have an idea about what we're going to need already. And the first thing we're going to need is price getting to a major level, like price getting to a major level, either support or resistance. So that's the first thing we're going to need. And the second thing we're going to need is very, very simple, and that's going to be divergence. You are going to need price to be giving us something like, as you can see, price is giving us, let's say price is giving us something bearish like this. Sorry, price is giving us something like this, and you're going to want to be seeing something like this in your you get what I'm trying to show you guys here. You're gonna want to see something like this in your whatever indicator you use to check your divergence. Personally, I use the RSI indicator. So this is what we're going to be talking about into this video. So this is going to be the major difference between trading the head and shoulders pattern as a continuation and as a reversal. And what is the major difference? Divergence. So let's just check out today's the pair for today. Sorry. So the pair I'm looking at is AUD card. Doesn't really matter. So now what are we expecting now? For this video, we're going to be expecting an head and shoulders. So why did I choose? What was the first thing I said? Let me bring out our rules. We need conditions. We need to know the trend. Okay, this is the trend is a downtrend. Let's check out the daily time frame. Damn, the network is terrible right now. Okay, now this is a downtrend. But if you notice something about this downtrend, price came back to a zone like that has been tested multiple times. And if you look at this zone, if you look at this zone, anytime price gets to this area, even when price got to this area the first time, there was a very big pullback. Like price went back instantly. Now price is coming back to the zone the second time. Now price can either break this zone and continue like a very serious downtrend, or this zone is strong enough to actually push price back up. So this is going to be my major area for now. Now since I've gotten an area of value, then this network is terrible. I think it's because of the weather. So since I've gotten my area of value and I've gotten my trend, the next thing I'm looking for is my first shoulder. So I don't know what's my first shoulder yet until I see my head. Now let's check. Let's play this a little bit and see how the market moves. Now if you look at this This gives us a perfect double top, a perfect double bottoms condition. But in this video, we are going to be looking at only head and shoulders. In fact, if I even bring out the RSI, you find out that this is a divergence. This is actually a divergence. But at the end of the day, let me show you guys what happened. Then boom. The reason why I showed you guys this is because I don't want you guys to believe that every time you see double tops or double bottoms, it is going to win. Sometimes you might see your double tops and double bottoms and you might place your trade and follow every single rule and it's not still going to work out. So let's see the reason why price didn't respect these double tops, these double bottoms, sorry. Price created, price is still creating lower highs and lower lows, as you can see. Price is still creating lower highs and lower lows. Lower highs, lower lows, lower highs, lower lows. So we are seeing we expect price to continue creating lower highs and lower lows, right? But instead, what the price do? Price went back to the beginning of this. So price went back to the beginning, like of this move right here. So there are two things that we're going to be expecting. The first thing that we're going to be expecting is for price to give us a deep pullback and continue the trend, because this price didn't break this zone. If price broke this zone, it's already a break of structure, and we're not going to be expecting an head and shoulders anymore. So price got to this zone right here, and as you can see, this is a very good sell if you are a counter trend trader, or in fact, if you are trading with the trend, this is a very good entry reason. This is an engulfing candle. You can see this is a big red candle right here. So when price got to this area, price didn't break it, and let's what happened. Oh, sorry, the network here is terrible. Price even gave a double tops to show you guys that it's ready to sell. Then, oh, damn, the network is terrible. I think because of the rain. Boom, that's gone too far. Then price got into this zone. Okay, just one more candle. Yeah, price got into the zone. And when price got into this zone, now let's be thinking about what's the next thing. What do you think should happen? Okay, this is an head and shoulders, right? How do you know an head and shoulders? This is our first. You can, if you don't know how to see it very well, I think there's something here you can use. Yes, just bring it out. Left shoulder, head, and the right shoulder is still on formation. But let me just put the right here. Imagine the right shoulder is going to come back to this zone. So you can use something like this to actually get your. You can use something like this to actually, if you can, that's if you can't really see it. So you grab. So, but if you can, I don't think you're going to need this. To me, it's actually looking weird, like too weird. So if you can see it, I don't think you're going to need that. Now, this is how it's already, we already have a pattern that looks like an head and shoulders. In fact, this is an head and shoulders. This is what we call an inverted head and shoulders. So how are we going to make sure that the price is not going to, because this is a downtrend, how are we going to make sure that the price is not just going to continue going down? How are we going to make sure that this is not going to continue going down? And you know that there might be a break of structure or a change of character right here in the lower time frame, but in this time frame, this is still a downtrend. You understand? So how are we going to make sure that the price does not continue going down? And that's when we bring out our divergence. Sorry about that. The network wasn't really good yesterday, so I had to postpone the video till today. So I mean, we're talking about how you're going to confirm that this trend is going to continue as an uptrend and it's not going to continue downwards. So how are you going to confirm that? You're going to need the divergence. So let's check out the divergence. Personally, I use the RSI as my divergence. So I know some of you might look at this. Let me remove this. Some of you might look at this and say that but this is a bearish divergence right here. Yes, this is a bearish divergence. This is actually telling us that the price might continue selling. I don't know if you can tell. Don't worry, we're still going to do a video on divergence. Yeah, and if you want it to be our next video, let us know in the comment section below. So this is a bearish divergence. It is called an exaggerate bearish divergence. Yeah, but if you look at the big picture, most of the time when you're looking at the forex market, try to look at the big picture. Look at the big picture. You would see something like this. This has gradually been going up, and this has been, let's see if I think from here, right? Yeah, fallen massively. So this divergence, I think I'm going to stick to this instead of sticking to this right here. I don't know if you, some people, most of you like to draw it from the top here. It's still going to be the same thing if I draw something like this. As you can see, this has been going up and this has been falling heavily here from here. So I think I'm going to stick to this major divergence instead of looking at this minor divergence. And the main reason is because two major reasons. One, I'll be sticking to this major divergence instead of this one is because, first of all, I've already seen a major price action pattern that has proven to be profitable to me or for me over time, and I'm seeing a divergence, a big time divergence compared to this small one. And if you go to the bigger time frame again, like the weekly time frame, you find out that you're still going to see some extra other confluence. You might even bring out your EMA. As you can see, price is even above the EMA, coming to the test the 50 EMA. So you can just mix different kind of confluence together. But the fact that since price didn't break above this zone and it's giving me a reason to buy, it's giving me a price action pattern, and I'm seeing a big time divergence, the only thing I'm going to be looking for now is buys. And if you check out our previous videos, you're going to know, you should already know our entry reason, at least for the aggressive entry. So what am I going to be waiting for? I'm waiting for a green candle, obviously. Boom. Okay, that's our green candle right here. We got a green candle right here. We don't really care how small it is. We don't really care what it looks like. This is an inverted hammer, but according to the strategy, all I need is a green candle. So let me place my entry right here. Now if you've also checked out our previous videos, you also know that our stop loss is going to be taken with the ATR indicator. That'll be 1 ATR below this green candle right here, and that is 25 pips. Just check it right here. That's 24.5 pips. So that I'll just make it 25 or 26 pips. Boom. 25. So that's like 39 pips in total. As long as you're risking a specific percent of your account, there's no problem. So where's going to be my first take profit? And that will be right here. My first take profit is going to be here. I think I'm going to leave it in a 1 to 2. My first take profit is going to be right here. And what's going to be us? Okay, let's play this out first. Boom. Then your second take profit should be right here. Third take profit, wherever you like. Fourth take profit, wherever you like. As long as you can milk, just try to. I don't know. I don't think this got to the last. You see, you just ended up making huge trading of a price action pattern. It just took like 3 to 4 take profits in just one single trade using this head and shoulders. So I hope you guys really enjoyed this video. So this is we have actually come to the end of the only profitable price action pattern you're going to need as a forex trader. Before we end this video, I would like to show you guys something. Now this is Aud Chf. Now this is live market right now, and as you can see, price has given us something that looks like an head and shoulders, but I didn't take this trade, and I'll show you the reason very very soon. Now this is shoulder. Price go to this place, and boom. Then price, this is nice, but I didn't take this trade. Some of you might ask, why didn't I take this trade? It's because the price didn't satisfy my rules completely. Although some of you might have looked at this area and be like, price came back to test this area, I should have taken a trade and um yes, buy to the upside. Yes, but personally, for my head and shoulders, at least I'll be expecting price to come and retest this zone. It is not really a subjective rule, like it's not really an objective rule, but it's just something I like to see, like something like an extra confirmation, you understand, for me to trade this, for me to take this trade. That's my, for my aggressive entry. So let's say the price has gotten into this zone and I saw this green candle, and I would have bought up this green candle. You can see how much we would have, at least we would have taken our first take profit, and now we are pushing our second take profit. But since price didn't get to this zone and just broke above my this line, what will I be waiting for? Very, very simple. I'm just waiting for price to retest this zone right here, or I could even shift it down a little bit. Yeah, I wait for price to come into this zone and give me an entry reason. And if price doesn't do that, I'll just be looking for trades in other pairs. You understand? You don't have to force the trade to do exactly what you did. Now, I might have entered right here and the price might have continued selling to the downside. But the fact is that you just have to. The reason why I'll show you guys this stuff is because I want you guys to know that before you use any price action pattern, you have to understand your rules. Like you have to give yourself specific rules that you must follow. You shouldn't try to follow the market every single time. No, I shouldn't have shown you guys because I didn't enter this trade, but it doesn't really mean, you understand? Because the price didn't obey like every single one of my rules. Because this, I don't really see this as head and shoulders, because this shoulder didn't really get or sink into this zone. So to wrap this video up, I'm going to just give you guys my view on the AUD card throughout for this week. Yeah. Now, 15-minute time frame. Now, this is not head and shoulders. I just want to give you guys what I think should happen to the AUD, what I'll be expecting from the AUD card this week. And as you can see, I'll be expecting price to get into this zone. There's a lot of imbalance right here. The price is going to clear up in order to get to this zone. So I'm expecting price to get into this zone. I think there's a fundamental news release. I think that's why the price is going up like this. So I'm expecting price to get into this zone. And once price, let me jump to the 5-minute time frame. Once price gets into this zone, I'll be expecting my entry basins from somewhere around here, like a double bottoms, or a very strong engulfing candle, or whatever. I'll be expecting it inside this zone. And once I've gotten it, at least, let's bring this out. Something like this. And funny thing about since this is a market reactions to a fundamental news, price might not even come. Price might just do something like this and continue to the upside. Whatever the price does, I'm not ready to pursue the price. I'll just wait. You understand? So I hope you guys enjoyed this video. If you did, hit that like button and subscribe. See you next time.